Hi, I'm Kerry Grinkmeyer. I'm your host here at bestofusinvestors.com. I need to apologize. Hurricane Zeta came through Birmingham. I guess it was early Thursday morning and did some pretty heavy destruction in the southern part of our city. And I lost my internet service yesterday afternoon and have yet to get it back. So I'm going to have to do a quick dance in order to get this video up. In fact, for those of you who are regulars here at Best of Us Investors, you didn't get my normal morning letter every day that the market is open. And if you don't know what I'm talking about, go to bestofusinvestors.com, and there you can sign up and give me your email address and your name, and I'll send you my morning outlook on the market every day. My tribe members didn't get it today, as I said, because I don't have internet service. So I'm going to shoot this video that I think is important, where to buy the FAANG stocks because they're going down. And I'm not sure they're going down, but I want to share with you my insights as to what I think is going to happen to the market in the next 30 days. Let's do a little history. I'm a retired financial advisor, so I experienced the dot-com bubble. I experienced the subprime crisis. I experienced the pullbacks of the market up until recently. But I think we can get some insight as to why we are where we are today and what might happen in the next year. And I think it's going to pivot on what happens next Tuesday. So let me share with you. Again, I can't go to the computer and access my charts, so I created something a little handy. And what I want to do is go back to the history of 2000. Right here I am showing you, in the red line, our national debt. In the blue line, I'm showing you the movement of the S&P 500 relative to the national debt. So this dot there at the S&P at 1367 was right before the right before the dot-com bubble. And as you can see, the dot-com bubble took us down a bit. At that same time, our national debt was $4 trillion. Let me give you some understanding of what the national debt means. When our forefathers founded the country in 1776, they basically decided that they would set up a tax system that would provide protection, provide the building of infrastructure for the country, and they would tax the citizens to do that. And that system got us through the Civil War, through World War I, through World War II, the Vietnam War, some early stages of some conflicts in Iran. It built out our cities, provided treatment for sewage. It brought electricity. It brought natural gas. It made the world that we knew in 2000. But they fell short. The taxes didn't cover all of that, and they actually built a debt of $4 trillion that we had in 2000. It took us 200 years to accumulate that debt. And that's what that red line represents in 2000. This blue line represents the S&P. And as you can see, as we move forward, we come to 2008, and the debt has doubled. Yeah, the debt has doubled. And why it doubled was we were recovering from the dot-com crisis. Our economy got turned upside down. And we had overbuilt the internet. There were a lot of companies that were not going to make any money, and they failed. And they put fear in investors. And the country made a decision, we got to prop up this economy. And so we saw our debt in 4 years double from what it took 200 years to accumulate. So then we go forward, and at that point, the S&P was at about 2,000. So then we move forward for 10 years. and now we're at 2018. In that interim, in 2008, we have the subprime crisis. Okay, so we see that that's the subprime crisis. The S&P drops. The federal government says, wow, we need to do something to save this economy. We had bank failures. We had people foreclosed on. We had people out on the streets. We need to help the economy. So the government between 2008 and 2018 pumped $10 trillion. So they took that rate of $4 trillion over 200 years, and they started pumping money into the economy at the rate of $1 trillion per year for 10 years. So we get to 2018, and we're up to $18 trillion worth of debt. And as you can see, the S&P climbs right along with it. We have a slight dip in 2019, but we recover quickly as the debt from 2018 to 2020 goes up to 20 trillion. So we're entering 2020 with $20 trillion worth of debt, increasing it at a rate of $1 trillion per year. And this is where we see the pandemic. And thus far this year, and we say the pandemic really kind of hit us in March, and we started funding it in April. So you got April, May, June, July, August, September, October. So in 7 months, we took our $20 trillion debt to $27 trillion. That's what it is this morning, $27.1 trillion. So we added to our debt at the rate of $1 trillion per month. And what did it do to the stock market? It took it to all-time highs. So since 2020 to 2027, we have funneled $23 trillion into the stock market. And you can see what it did. Where did that money end up? That's the real question. It flowed through your hands. You may have gotten a stimulus check. You may have gotten some relief, a loan at a bank. You may have invested in Amazon back in 2000, and some of the money that Jeff made, you made right along with him. But most of that money is now in the coffers of Amazon, Facebook, Apple, Google, Netflix, Tesla, and Microsoft. That's where that $27 trillion. I mean, there's some that have gone elsewhere, but that's where most of it has gone. So that's where we are today. We have a very important event happening in Tuesday. And as a result of that event, my question is, are we going to have a buying opportunity of a lifetime in, and I'm talking about the FAANG stocks plus a couple more. Is this running line going to come down to the green dot? The green dot is what I call the trading trough. This is the channel in which the S&P 500, and you can find a similar channel on any of the FAANG stocks, that they trade it in until they get into positions of either extreme exuberance or extreme stress. We are in a channel of extreme exuberance. As a result of the subprime crisis, these companies have fared extremely well. We know from past history that they will revert to the mean. History tells us that. So the question is, what has to happen to get this S&P 500 at 3,300 down to where historically it should be, somewhere about 2,700, a 20 to 25% drop from this extreme here. What has to happen? Well, what happened back here? We had a subprime crisis. Lehman Brothers failed, and 3.5 million people were foreclosed on and put out on the street, and they lost their jobs, and the market dropped below it. But then we funded it to bring it up. What happened back here? I guess that's the subprime crisis. What happened back here? The internet got overbuilt. There were a bunch of companies that were never going to make any money, and the investors realized it, and fear struck them, and down it went. So what has to happen here to get it to there? I believe we have an election Tuesday, and I believe there are 3 scenarios that we have to analyze and anticipate as to what are they going to do and how is it going to affect the markets that we want to invest in, and in specific, the FAANG stocks. What is going to happen to give us that buying opportunity? We can go to our charts, so we can see where the trading channel is on each one of them, and we can pick a price and say, that's where I want to buy it. And if this happens, if the fear factor comes in like it might, that's where I want to buy it. I'm sorry I can't go to the charts because I don't have any internet right now. But I want you to go through this practice with me because it could be an opportunity of a lifetime. And I want you to go down into the comments, and I want you to tell me what has to happen in order to get that blue line down to that green dot. And I'll explore part of it with you. I think there are 3 scenarios. One scenario is that President Trump gets reelected. We know that he has been beating the drum about the greatest economy this country has ever seen, and there is nothing that he won't do, including or cranking up those printing presses, to keep that economy on the track it is. So if President Trump gets elected, I just don't see a possibility that the money just doesn't keep coming and you do not get the opportunity to buy the FAANG stocks as they go down. I mean, they'll go down between potentially, as they are. They lost somewhere around 5% on Wednesday. On Thursday, they recovered 25%, and then it looks like today they're giving it back. So if President Trump gets elected, it's nothing but a straight line up. What if Joe Biden gets elected? Well, Nancy Pelosi, and if they get control of the Senate, Nancy Pelosi has already said she's ready to take us to $30 trillion in debt. She wants $3 trillion immediately. So what is the scenario under which this thing just doesn't keep going up? That's my scenario 3. And I'm not going to tell you today what it is. I want you to rack your brain for 24 hours, and you in the comments, you tell me what you believe could happen that would bring the market from where it is now down to that green dot. What would cause that drop? And I believe I know what it is. But I want you to tell me what you think might cause that to happen. This is an exercise that I want to continue. I did a live stream yesterday, and I told people I'm not going to be a talking head that tells you what's going to happen and when it's going to happen, and you do no studying and you do no thinking on your part. There's plenty of people you can go to on this. And because I ask you, if you found out today there was a potential you had cancer, would you go to a talking head on YouTube to get advice, or would you search and get knowledge and then go to 3 doctors and find out what's going on? Of course you would. So you need to educate yourself. And that's what I'm going to challenge you to do. Tell me what could bring it down to the green dot, because I think there is something that could. I'll tell you tomorrow morning. If you want in the future to get my morning letter, if you want to be a part of this tribe, go to bestofusinvestors.com. Give me your address or your email address and your name, and I'll send you a morning letter. This is the first one I missed out of, it would have been my 101st. So that's my take. I think this is exciting because I think the future is coming faster than you think. But I think we just might have a buying opportunity of a lifetime in front of us. So let's talk about it tomorrow morning, and I'll share with you what I think could happen. And I think there's a good possibility. So get ready for that. Tune in tomorrow morning, and let's trade information and grow together.